Hi, I'm Mickey,
I'm Sherry.
and we're with Gorilla Capital Partners, and you're listening to the S.M.E.
Stories Podcast.
You are now listening to the next great small business podcast. Welcome to the S.M.E. Stories Podcast, where it is all about small businesses in Canada. And here's your host, Ken Alfred.
All right, guys, we got a great episode today with Mickey and Sherry Patterson of Gorilla Capital Partners, LLC. Now, a little bit about Gorilla Capital Partners. They're more than just a company. They're actually your strategic partner in prosperity. They specialize in raising capital for high potential syndications and funds. Now, they're committed to sourcing and structuring investment opportunities that are unique as they are lucrative. Now, they have one basic mission, which is unwavering: to empower the investor with the resources and knowledge they need to achieve financial growth and security in a complex market. So they really focus on real estate investment there. So a little bit about Mickey himself. Now, he spent the last 25 years in sales and business development, where relationship selling was paramount. Now, this carries over to non-work related items as well, as he spends his free time as a coach, whether it's rugby or Brazilian Jiu-Jitsu. So as you can see, I think Mickey and Sherry are going to have a great story here to tell about real estate investment. So sit back and absorb. All right, guys, we got Mickey and Sherry Patterson from Gorilla Capital Partners. How are you guys doing?
Doing well.
Great.
All right. Well, you guys are based in Texas. Am I correct?
You are the North Texas area.
North Texas. And what is the weather like in North Texas right
Sunny and probably 50-ish. So it's pretty nice. A little brisk, but
like Saturday was 80. So
Okay. Well, I got my Canadian temperature to Fahrenheit calculator here. So you had 50 something. That was about
around 10.
10. I was like, okay, that's somebly. We're here. I'm here in Ajax, Ontario, Canada, which is east of Toronto, and we're at
minus 10.
41. We're at 41 right now.
Usually 4 degrees or so Celsius. Yeah.
Pretty much, yeah. Like honestly, once it hits that 10 degree, it's shorts weather. I don't know what it is. My wife's already told me, Mrs. K. She's already said, okay, you know what? She went grocery shopping over the weekend. I said, what'd you get? I got short ribs for you to barbecue. I'm like, there's still some snow on the ground. You want me to barbecue? She's like, well, it's going to be sunny. Oh, because sun will heat me up, right? Apparently that's what it's supposed to do. So, but aside from that, no, I'm glad to have you guys on the show. So, all right, Gorilla Capital Partners, what's your story?
Well, specifically with Gorilla Capital Partners, it's a company we started just a few years back, and it's kind of a culmination of a few different things. Sherry's had a real estate business going now for 10, 12 years, quite some time, and we were looking to grow that and evolve a bit and really scale, and we migrated to looking for opportunities to bring other people into investment projects, do bigger projects, and expand our growth, and that's where we kind of went into syndications and fund development and management. You want to add into any of that?
Well, we were talking prior to getting started that my degree is actually in entrepreneurship, since you have a lot of people on here that are, like you said, are looking to jump into businesses and have a little bit maybe of analysis paralysis. And that's something that I deal with a lot with real estate. So I get a lot of new investors that they have been studying it for months, years, but don't necessarily ever jump in. And so that's where I help with the education and help them to find that right property and get them started. But we've owned businesses from entertainment center, Coyote Saloon, occupational health care, event business, event planning. We have wedding venues. And then real estate, short-term rentals, new builds, RV parks. So wide variety of businesses. And I also specialize in digital marketing for the advertising for our businesses, and to also help other small businesses to get their name out there and help to promote their small businesses also. So
basically you're a newbie. No, I'm kidding.
Yeah.
And I think specifically to Gorilla Capital Partners, and I'm sure you gave a broad range in our background. And one of the things that we found is that there's a lot of people, well, maybe not as much on the entrepreneur side, certainly in the business, they're fascinated by real estate. How do I get involved? How do I get engaged? And this is an area where we can help people be involved in real estate without having to be property managers, without having to be landlords, without having to do all this kind of stuff. And so that was an area where we wanted to grow and then bring other people into those, so we can build a lot with other people in that same network.
It's a way for them to get involved too as a limited partner with our syndications, that they can invest, but like you said, not have the risk that so many people are afraid of, that they continue to do that, analysis of getting involved because they're afraid of that risk of losing their money. So we set up different investment strategies for people that maybe not eliminate, but definitely
Mitigate
some of the risk.
Let's just walk that back for a second. So my listeners who aren't familiar with syndication, real estate syndication, can you walk into a little bit of details of what does that involve?
Sure. I'll give you a 30,000 foot view. It's basically where people who have access to money, you say it's finances, money they want to put into a deal.
It can be their 401k.
Yeah, exactly. So where the money comes from, and the 401k is a great resource for people. Instead of having to be an expert in, I know this land or this land, they invest in and effectively investing with the people like us or other syndicators to be involved in either one big apartment or multiple assets. The easiest comparison I can make from a stock market is just like people would invest in a mutual fund. You're not going and analyzing every single stock that you might invest in. You reach out to a Vanguard or a Fidelity or one of these groups and you say, look, I want to invest in the market. I really don't know what I should be doing. Can you help me? And then those mutual funds help them with bigger projects, but then pooling their money with a bunch of other people. Syndication is effectively the same thing in the real estate.
Oh, I like how you guys broke that down, actually, because I think for a lot of people, like you said, I used to invest, like I wanted to invest in real estate a while ago as well. Like, I listened to the bigger podcast. I watched those flipping shows and, some of those. Yeah. So it's like, oh, wow, that looks like that's really fun, right? Because to me, it's like with real estate, it's very tangible, right? You can literally see it. And I guess those fix and flips, which I know you guys have a lot of experience in, shows is that everyone loves the sledgehammer. When they see the sledgehammer and the demolition, that's the fun part, right? They're like, oh, that's great. But they don't realize that sometimes, that may look fun, but those things can cost a lot of money. So you have to be very careful, especially if it's not just your own. If let's say you're borrowing your parents' money or friends' money, or very close friends' money, you got to be very careful with what type of deals you want to work on, right? So I think what you said is about, at least from a syndication perspective, you can work with someone like yourselves who've done this a lot, so that you kind of know, and you're able to educate them to say, okay, here's a particular deal, here are the risks, but here's we're going to mitigate those risks. So right. Investing with us is a safer bet than maybe them trying to do what you guys are trying to do. So that's really good. So what is then your niche? So is the syndication is your biggest niche that you have for your particular business, or is it so spread out with a bunch of different other things that you guys focus on?
Well, I would say for me specifically, that's probably my biggest focus. As I mentioned, Sherry's been in the investment real estate space for a decade now. And that's my niche. She does a lot with,
I'm a broker, and that's all I do is investment real estate. And I am a preferred agent on Bigger Pockets. And so I help a lot of newbies. I've actually had 2 calls already today with investors from Bigger Pockets and help them get started. And what I tell all my clients, and you were talking about easy to lose money, is education is expensive. So, but I do tell people to jump in and do it. Obviously, get a mentor, or again, I'm willing to hold their hand as much or as little as they need me to in whatever their venture is. But I try to guide them. Like, I spoke to people today that they're interested in doing a BRRRR method, which is, buy, rehab, rent, and refinance. So that's single family, which is fantastic for somebody getting started, for them to learn and how to do the rehab and things like that. But it's very costly. There's other ways to get into real estate that is not as costly as that. Perhaps you could learn just as much or more and have a higher return. So I try to educate people on the different aspects of it. And some people are just set on that. That's what they've been studying for the last 6 months, year, and again, haven't bought yet, but that's what they decide they want to do. Okay, great. Then I will guide them through that. But I try to educate them on different areas of real estate. So again, whether it's RV parks, mobile home parks, or tiny houses, short-term rentals, whatever it is, my tagline is, if it's investment related, I do it. So I help whether they're new investors or seasoned investors. Sometimes even seasoned investors, well, maybe they've never had a short-term rental before. They can be a syndicator, so they have lots of money in multifamily, but they've never bought self-storage. So there's so many different aspects of real estate that people can get into, and so much to learn in that. So
Yeah, and kind of specific to the Guerrilla Capital Partners, or just our syndication approaches, our overall investment real estate approach is really agnostic. As you mentioned, short-term rental, tiny houses, those have been kind of a really fun project we've done several of. The Airbnb or short-term rentals, the apartments, or RV parks. There's a lot of ways people can be involved. And I think a lot of times people just aren't comfortable with kind of flowing with the market conditions. And it's one of the key things that will help you migrate as it's more challenging in one space. For example, apartments, which are pretty challenging to work with right now. As you can look at other opportunities, maybe it's land development or building to rent. There's a lot of opportunities for people to still be involved, not just in one little tiny niche. So as long as you're flexible and kind of well-rounded, you can kind of shift with the times and stay ahead of it.
And we set up Guerrilla Capital Partners so that more people could be involved. There's a lot of people that, like you said, may want to do real estate investing, but don't know where to start. We can do so much more together. So we can get multiple people involved, and maybe we can buy an RV park, whereas individuals, they can't afford to do that. So there's lots of things. We've tried to find different areas. Again, right now, if we're doing a land subdividing or something, you can get a lot of other people involved. Maybe it's something, again, that mitigates the risk on their side by working with us, that we know how to do it. But that's someplace they can put their money, invest, and it's a short term, because that's a quick, when you're subdividing land, 12 to 18 months, and that's done. Get your money back, you made a profit, and then move on to the next one, and you learn something along the way. So we put together projects for people to join into.
Yeah, I think it's also to think for people who are looking to get into this as well, is that, it's better to get 50% of something than 100% of nothing. Right?
Oh,
if you're just going to, because otherwise you're going to be like the people that just be like, oh, I wish I did, and all that sort of stuff. And next thing you know, you're retired, and you're just like, all right, man, I wish I got into that stuff a while ago.
And not just that, just as your money is sitting there, you have to kind of think about it. And the number side of it is you're losing money at the rate of inflation. And this past year, if your money's sitting on the shelf, you're losing its value at 8, 9, 10%. So money sitting there not being deployed actually costs you money. So it's something to think about. It's got to be out working for you, or it's losing for you.
Yeah, absolutely. So let me ask the next question here then. So how big is your team right now? Because like you said, you look like you're managing a lot of different projects. So how big is the current team that you guys have?
So the way we're structured is Sherry and I are kind of the primary focus of our respective teams, and we work together on most everything. And then we'll have a few people, like a handful of VAs that help with some of the marketing and admin. And then most of the rest, we really work through partners, whether it be the rehab group. So it depends. If there's an active project, we may have 3 or 4 or 5 or 6 people working on something in addition to that project. Or if it's not, just as far as a standing team, we're still pretty small handful of people that really work with everything.
Mostly, get VAs that he was saying. We have a full-time VA that does our property management, another one that's full-time that does our social media and digital marketing, and ads and stuff. So we've, full-time contractor that works for us. I also do property management, so he does all the make-readies and maintenance requests and things like that. So I also have a handful of agents that work for my brokerage also.
But I think that, what I'm share, especially with the group that you have as far as an audience, we don't have this giant expansive team with a big outlay of money. So it's something that as people look, that can grow and still do it relatively cost effective, where you deploy people as you have a project or need, but you don't have to build this giant infrastructure to go forward.
It's almost like having them on retainer almost, right? It's like, okay.
It's very, very much like that. Yeah.
Oh, pretty cool. So then,
and again, blessing the VAs, when we have been able to interview and hire people that have college educations, but just their monetary means are different than ours, that we may pay them $3, $6 an hour, and they do great work.
Wow, interesting. Wow. So then, so for this then, so what are your plans for the next 5 years? What are your goals for like expansion? Like, do you want how big do you want to how big do you want to build this?
Yeah, my goal is to retire in a year and a half. So I've been saying that now for a good 5, 10 years. So he has a year and a half to figure out what he's going to do to supplement my income so that I can retire. I want to be a
Oh,
stay-at-home grandma.
oh yeah,
But I
nice.
think along those lines, where we'd like things to be in that 5-year plan is still doing what we're doing, especially from the Gorilla Capital Partners. And certainly her side is much more active business with the brokerage and working and educating, a ton of people in the area. And she's still got one of the largest REI groups in the Dallas-Fort Worth Metroplex that she runs every month. But
Real estate investment group.
I'm sorry,
Yes.
real estate.
Largest real estate investment group in the DFW area called Impact.
And but I think a lot of what we'd like to focus on is probably geared more towards the syndications, to where we can still be involved in those, working some of our own properties and projects, but take a little less active role. Ideally, in 5 years, we'd like to be relatively passive, even in our own efforts.
Oh, that sounds pretty good. At least you guys have somewhat of a plan, which is good, right? Because I think a lot of people, they get into this not thinking of the exit strategy, though. It's just like, I just want to start my company. They don't even think about, oh, what do I want to do once I'm ready to either close it or transition to someone else. So there's no, like that's the fun thing. I'll make this story quick, is that my in-laws, they run this big company in Hong Kong, right? It's a plumbing supply company. They're very successful in Hong Kong. And unfortunately, I'm in Canada. My wife is also in Canada. My sister-in-law's in Canada. My brother-in-law's in Canada. And my young sister-in-law, she's going to be moving to Australia. So the question is, all right, who's going to take over the company? All right, that's
Right.
going to be something that they have to consider, because they're very successful. So it's not like a small little mini shop or anything where it's like, oh, okay, well, we can just close it down, not a big deal. They have like hundreds of people that work in the company, and to try to figure out how they're going to manage this, it's a pretty big decision, right? But all I know is that I don't plan on moving to Hong Kong. One, I don't speak the language. Two, I don't know if their staff who've been with them for about 50 years, I don't know if they're going to like me very much, right? Because if I'm the son-in-law, will they listen to me, right? If I have any insight on anything, right? They'll be like, what is he talking about? They don't know the business.
Or
And all that sort
they'll
of
just
stuff.
assume you don't know what you're talking about.
Yeah, they'll assume I don't know what I'm talking about. And could it just be managed as is? Probably, because I'm sure they have a very good management team. But if they want to take it to the next level and increase and move up and up, those decisions are going to have to be made from some leader. And it's hard when you are the face, right? So, yeah, exactly.
Yeah, and that's what I tell my clients too, is, the big thing that I teach in all my classes is to have your BHAG, your big, hairy, audacious goal, and put on your aim. Well, that could be 20 years from now. But whatever that goal is, you need to be working backwards from that, so that you have your 10-year, 5-year, 3-year, 1-year, quarterly, monthly, weekly, daily goals. And if you don't work on that goal every single day, and I tell my clients, well, that's 10 minutes, 15 minutes a day. If you're not doing something to move you forward towards that BHAG, then you won't ever accomplish it.
No, that's great to hear, right? So, yeah, you should definitely think about what's happening. I think with real estate, we'll get from that from the pro segment here later on, where it seems like, oh, you can either buy or you can sell, or you can fix, or you can maybe just put it on, just rent it out. But I'm sure there's more intricate strategies that are there, and we'll definitely touch upon that. So let me ask you back to your business here. So then, what has been, how you're running your current operation, what has been kind of like the biggest expenses that you're kind of seeing, especially the ones that maybe most people don't even think about?
Right now, I'd say the biggest expense that's in most of the projects that we're evaluating anyways, the cost of money, the interest rates, that's more than anything, that's driving whether the deals will work from a cash flow standpoint. Because most of the projects we're looking at are people are investing money. They want money either coming out quarterly or at least an appreciation of the property so they get gains later. And right now, the biggest factor has been the increased cost of money. And then we'd have some of the bigger ones. At least here in Texas, insurance costs are pretty high. So I would say they're just expense items within the property's operations themselves. So I think that's probably the one that we run into. That's the biggest limiting factor for whether the projects makes sense, or we talk about underwriting or pencil out. Basically, do they operate in a positive enough fashion? I would think those two are probably the biggest single items.
Well, I tell people that so many people are waiting it out. They're thinking, oh, well, I'm not going to buy right now because of the interest rate. However, we don't know that it's going to go back down. We're actually in a mid-range now that's very average. We got spoiled to those low interest rates in the threes. However, when we bought our first property in 2000, our interest rate was 13%. So the fact that we're at 6 to 7% now is really not that big a deal. People need to marry the property and date the interest rate. If they want to get into investment real estate, the best time to start is today. If you didn't start a few years ago, the best time is still today. It doesn't matter about the interest rate because, again, that's going to change. You can always refi out of things. So I would also say the biggest expenses that have changed since COVID is going to be the cost of materials. So whether you're rehabbing, whether you're building, or whatever you're doing, the cost of materials have gone up, as well as what contractors are charging. So prior to COVID, I could know, okay, I'm going to go into a B-class neighborhood, which is, a middle-class neighborhood. We're going to make this house rent ready, and it would have been $14 to $16 a square foot to rehab. Now that price is close to $25 a square foot. So it's very different than what it was a few years ago. So I would say that's the biggest challenge, is knowing those numbers, though, when you get to underwrite a property, whether it's a single family or whether it's a large multifamily or whatever it is, to know what those numbers are and the cost involved.
Well, yeah, like they totally. I remember during the whole COVID era when it first started, like lumber cost was so high, so that I guess a lot of people. I mean, there were still no huge lineups at Home Depot, at least here in Canada, where it's like, okay, people want to just do something, right? I call 2020 the year of the BBGG: baking, biking, gardening, and golf. Those are the four biggest things I saw in 2020. Like, there was never a huge lineup at a few things, but you didn't hear about, because I guess people wanted to, maybe they'll do some construction work, maybe they'll just do some woodworking, and the cost of lumber was through the roof, right? And all the logistical stuff was coming in, right?
We built a house.
We fortunately we did build the house that we're in now, but unfortunately we had to do it right in that window of the high prices. And
oh my goodness.
And lumber materials, to put it in perspective, were anywhere from 3 to 4x what they cost materials. And it ended up significantly changing our overall plans within our house development.
But no one knew this was happening. We sold our house, and again, with interest rates, when we sold our house, our interest rate was going to be 3%. When we finally closed, it was 7.8. So that's a huge difference in monthly expenses. Yeah. And of course, the cost to build was a good 30% higher than what it should have been when we started.
Yeah, and just to touch upon your interest rate here.
But we're still not back to where we were, but it is going down.
Yeah, and just to jump on the interest rate discussion for a second, because here in Canada, I think it's very similar in the States, where the interest rate now is roughly around 6-ish%, right? And I think and in Canada, and I don't think they do this in the States, right? Because whatever interest rate for your mortgage or anything, that's pretty much what you're going to be getting, whether it's fixed or whatever, 30-year fixed or whatever. But I know in Canada, you almost have to redo it every few years. So you can get a 5-year fixed rate. You can be amortized for 30 years, but every 5 years or so, you have to decide, okay, do you want to
rate mortgage? So
you either adjust it or you can try to go for another fixed rate, but it will change. So it's rare that we can see that. But our mortgage is due this year in April, and we're still trying to figure out, okay, what's the interest rate like? Right, we have to almost play with the crystal ball. It's supposed to go down. Okay, good. I've saw one where they offered me a fixed one for another 5 years. But I'm like, I think it's going to go down at least 1% by the end of the year. So do I really want a fixed rate at this point? I don't know.
And it's all, unfortunately, it is really all speculation.
Yeah.
I'm not sure about Canada specific, but here, where the labor market is still good, the employment rate is good, there's not a whole lot of indicators that are actually pulling that rate down. Inflation's still high, so you see some of these things that would tell you rates shouldn't drop, but then you have an election year, so rates should drop. So it's there's all these competing forces, and it's well, what are they going to do? And I think that, my opinion is that anybody who says, well, they're definitely going to do this, is really just making stuff up. It's
Yeah.
nobody really knows until you see it happen.
I used to say it's like being a meteorologist on the news. You can be totally off and still keep your job, as long as you're not calling for 20 centimeters of snow in July. You're probably going to be okay, right? But aside from
Especially here
that,
in Texas, where we have some definite bipolar weather.
Yeah.
well, I didn't, and that's the thing I didn't really notice about that. And then I heard about some ice storms that happened in Texas a while ago. I'm like, they had issues. They had that?
3 days later at 70 degrees.
Oh, within the same day, we could wake up and it's 26, and by the afternoon it's 80. It's
Ridiculous.
you never know how
Wow.
to dress.
You know, just keep a 4-season clothing in your house, you'll be fine. So, all right. Next question here before we get to the tips of the industry here is, so you said you talked about the social media piece. You have your social media VA that's helping you out and all that stuff. So how important is the social media piece to your business, and what tools do you use?
So I would say it's very important. I have just spent this past year taking a very intensive digital marketing class to get the ads out there. People have to know, like, and trust you. And the only way to do that is to get your face out there. So running Facebook ads, Instagram ads, I have super stupid TikTok videos that I put out there. But so that people, start seeing you over and over again. It's like, oh, that's a lady that does real estate. I have a billboard that's being put up here in a week or two here in our little local town. And it's just getting your name out there over and over again. And I have little other techniques that I do on Google to, again, get your name out there. So if someone were to Google a local restaurant, when they get to that page on Google, my picture pops up with my face in front of that restaurant with my review and the logo to my business. So the goal is to be everywhere. People have to keep seeing you over and over again because they say, what now? It used to be 3 touches that people remember you. Now it's something like 37 touches before people are going to even recognize you or know who you are. So you have to keep getting your name out there and people keep seeing you over and over again. And I'm also really big on giving back. So trying to help other local businesses. I'm working on that. It's actually a class that I took this morning about giving back to the community and other local businesses and helping them learn, maybe to learn what I'm learning with the digital marketing. And if I can help them, that will come back to me. So it's a win-win for everybody. So I'm about to set up a local class to teach them how to do marketing for the local businesses.
Oh, that's pretty cool. I feel like, Sherry, just listening to you talk, it almost sounds like you're pretty much meant to be a coach, some way, shape, or form. Like even when you're saying you're going to retire in like a year or so, but I still feel you're still going to be coaching people in some way, shape, or form.
I do. And what the problem with that is, I have a coaching program. I have a program that is anything you want to learn about real estate, over 100 classes. That most of them, the smallest, are like $5,000 class. If you want to learn how to flip, we've got a $5,000 flipping class. If you want to learn how to do everything in real estate, let's say it's a $30,000 commitment, but what a savings if you've learned everything opposed to having to go out and learn it yourself. However, I don't market it. I don't sell it because I spend all my time teaching people for free. So my clients, they call me, I coach them. Again, I hold their hand as much as they need me to. So I do enjoy teaching. And again, I have my event. That's the 4th Monday of every month at a Dave & Buster's here that I teach and talk to people about their goals. But it's a free event. So I do enjoy teaching. I've done a lot of speaking. And that is where I enjoy it. I do want to eventually, that maybe something as I retire, a lot of people are speaking engagements, but not necessarily to sell coaching so much. I don't know. Not that I don't mind making money, because I do want to make money, but I just really I love seeing my clients succeed.
Maybe more motivational speaking kind of thing. That especially and those who want to get in like the real estate space, right? Like I think you can do many talks on something like that, where just to get people fired up and to not give up, especially when if times are getting tough and they're struggling with a deal or going through something, or they're just pulling their hair out, they can't find the deal that they want to do and all that sort of stuff. So I think you'll be able to motivate the people to do it. So let's jump into.
So that would bring me full circle. That's how I started my career as an event planner. I traveled with Jim Rome, Brian Tracy, Les Brown. I was their event coordinator in my early 20s. And
Wow.
so that would bring it all right back around.
It's almost like, what haven't you guys done? But then let me just simply quickly go. Let's ask some questions related to the industry itself here. So, what is your opinion on the current real estate investment industry, and where do you think it's going? I know it's a broad question, but I kind of want to hear what your thoughts are.
I think you kind of have to segment it. I would say let's say by assets, and for example, in the apartment space, I think is taking a lull. I can speak more to Texas, for example, where I think there's $24 billion of bridge debt coming due. There's going to be a lot of people who are struggling on the refi. So I think you're going to see this big suppression in prices. So I think there's going to be a lot of deals to be found. I think that the underwriting is going to be much more scrutinized. And so, but I think there's going to be a lot of good opportunities, especially in the latter half of the year. And then I think within the single family market, she can certainly talk a little bit better to that space.
Not really. Again, I try to steer people away from it, just because right now, there's just not a lot of spread in single family, and really even in the smaller duplex and fourplex. It's a little bit better, but there's not as much spread, not as much return on investment. So again, I try to gear people into spending less and making more. So I do a lot of creative things that, again, not necessarily make any money, whether it be tiny houses or even RVs and
development. I mean,
yes, and land development. There's other ways, and again, something not as glamorous to say. People like saying, "Oh, I have 100 doors of multifamily." They don't like saying, "Oh, a mobile home park." It doesn't sound as glamorous, but it has way higher returns.
Yeah.
So yeah, I think there's certainly opportunities out there. I would probably characterize it as people are going to have to do a lot of shifting in their kind of focus of where they like to invest, both geographically as well as asset types.
Yeah, like I think that's an interesting comment. I was gonna say something. I used to be a part of an REI group a while ago, and I remember it seems like you talked to the people in the group, and everyone was kind of bragging how many doors or how many units they have. It's almost like, the more the better, right? It's like, okay, that's great.
And it can be.
Yeah, it can be. It can be, but it's almost like if you almost feel like if you didn't have, like, size matters, right? Because then if you have, let's say, 10 units and you're talking to someone with a 40. And you say, how many units have? 40. Oh, how about you? Okay, yeah, I'm going to get my drink over there, right? So you don't want to almost like say it because like, oh, well, we only have that much. But for some people, it was more like, yeah, okay, it's nice to know. But what's your secrets? That's more I would ask. But I always want to hear what people have. It doesn't matter if that's 1 or 100, right? If you have that 1 unit, but it's cash flowing, awesome.
And I think that's the big is how you're in the deal, because there's a lot of people who own they've got, let's say, 25,000 invested in a 1,000-unit apartment. Well, that's, obviously it's a very minute share, but I think it's good to understand, don't get caught up in the keeping up with the Joneses as far as that. What you really care about is, what is your money doing for you? And whether that be a development, a mobile home park, whatever, RVs or apartments, it's really what matters is, how good of a return are you getting? Did you get a 25% return last year? Did you get 2? Or did you lose money? I mean, those are what you really care about. The other stuff will just kind of informative metrics, but not really tell you how your deal is doing.
Well, and again, some of those people that may say, "Oh, I have 300 doors," but like he said, well, they may have 300 doors. They may have $25,000 in 3 different syndicated deals. So they're only $75,000 in, whereas this person over here that owns 1 single family has more skin in the game than what this person that's saying, "Oh, I've got 300 doors."
Right.
They don't personally own 300 doors.
Yeah.
They're a limited partner in a syndication that owns 300 doors. But that's always how they present themselves. And we've run into that a lot lately with people.
And I think it's a good learning metric, especially as you talk to people about whether you want to be involved with those groups on the syndications or just learning. And because people say, well, where do I spend my money? And I think Sherry's and my answer is going to be the same. Well, where you can get the best return. And maybe that's apartments, maybe that's this, maybe that's whatever. And, and there's going to be an answer. Sometimes that's not real estate. Mm-hmm. And that's, nobody wants to say that either. It's, maybe maybe this time period is better in this industry,
Yeah.
and maybe come back here. We like this asset class, but it's not always the best one.
I mean, honestly, if you can find a good return, whether it's buying a pre-owned laundromat or buying a franchise, okay, like you said, it's all about how much skin in the game you have, and is the return. What's the anticipated return on this, right? I think that's something that you want to talk about too. So let me ask you guys this one. So you're in the real estate space in a lot of different buckets here, which is really good. What are the common misconceptions you get when you tell someone that you invest in real estate? Like for those people who don't know a lot about it, and you tell them, oh, because you've done so much, right? You say, oh, I invest in real estate. What are the misconceptions that sometimes people have of you?
I would say from the bigger side, and we talk about bigger projects or syndication, they think of, like a REIT. Yeah, you're investing in these, on the market kind of REITs. And I'm like, no, it's a little more different. We're actually operating the properties and doing that. So people think kind of big stock market stuff, and I'm just buying a REIT that a Vanguard or somebody would offer within their portfolio. So I think that's one we get a lot. And then the other would be probably just more, the typical buy and be a landlord type stuff.
I would say more of, as I get older now, it's hard for me to say the older generation because now I'm becoming that older generation. But like with our parents, for the longest time, even my mother was, why don't you go get a job? And, I was like, I don't think you understand. She, at one point, my cousin was becoming a teacher and, they're hiring teachers. And of course I wanted to say, why in the world would I go get a job making $40,000 a year? I don't think you understand. I made $500,000 last year. I don't think they really understand what I do, and how we make our money. They just, they don't understand that it's a job.
Yeah.
I think that's the other one. What is it a real thing? It's like,
well, yeah. I've heard some people say, oh, you're like the we buy houses kind of people, right? They're like,
Wow.
not necessarily.
But sometimes, yes. I mean, that's the truth.
It's not opposed to wholesaling.
Yeah, wholesaling, which is a strategy within the approach. It's one of the strategies. So there's a lot of them that sometimes work. Yeah.
Yeah, absolutely. So let me ask you this, Len, here. What has been your biggest failure, but also your biggest success so far running your business?
Just in real estate?
So
we can expand it out, be sure.
I think probably at the very beginning, so I think the two kind of went together. At the very beginning, when we were starting on the real estate investing, the typical analysis paralysis. You mentioned that earlier with some of the people, and I'm a background as an engineer, and just would literally sit there and analyze stuff forever. And finally gotten some good advice. Just find a deal that the numbers work, and the first one that worked, just do it. And so the reason I say it's a failure on that is because we probably lost 2 years of useful investment in that window of 2006 to 8 or so, or one of those time periods, maybe earlier, where we missed a lot of opportunities. So our opportunity costs were enormous because we wouldn't just take action. And kind of to Sherry's point is, we left a lot of opportunity and money on the table just for lack of action.
And I would say for me, my first deal was a flip. So again, back to bigger pockets, I kept out learning and analyzing and everything. And so finally I was listening to somebody that said, you know what, the best way to do is just go do it. And I thought, you know what, you're right. I went out the next day, found a house, got it under contract, and bought this house. Well, this house was built in 1890. So it had to be completely gutted. I was over there every single day. I did work myself. I learned how to sheetrock. I put baseboards up. I made concrete countertops and learned how to put tile down and learned all that stuff myself. I learned what things cost, what it should cost, how to do it. Education is expensive. As I say all the time, I lost $17,000 on that house, but I learned a lot. The next house I did much better. I only lost $12,000. So
incremental improvements.
Yes, it was getting better, but
it helped a huge amount, especially as you dive in. You like it or not, you really learn those. Hey, this is something we learned, and you can either go to a classroom environment or have a mentor and pay for that education, or you get out and do it. And different people learn different ways, and
either way, you're going to pay for it.
Yeah, either way, the learning is not cheap.
No, that's great to hear. And sorry, the biggest success though, we heard the failure part. You said missed 2 years of opportunity you missed. And then of course, Sherry, you talked about the first couple of deals, losing a bit of money on that. What about your biggest success?
I would say our biggest success was purely accidental. We built our forever home. We built it ourselves as builders, and we had no intention of selling it. And I got a call. That's why we built during the height of everything. Everything was so expensive. I got a call from another realtor and said, "Hey, would you consider selling your home?" It was on a lake, and there's just no new homes on this lake, no lots available. And of course, my first instinct was, no, I've waited my whole life to build this. This is my dream home. No. And then she gave me the offer, and I said, "Well, you know what? Let me pack my bags." And so I think sometimes we're given things we didn't know we needed. With the amount of money that we made off of that house, again, because we built it ourselves, so we had a lot of equity in it, as well as they just paid a lot of money for it. We were able to come out and live where we live now. We have 140 acres, and now we have all kinds of animals and farm animals and longhorns and tiny houses out here that we rent, and it allowed my children to come home. They're building houses on the properties. All my grandkids be living here. And it's awesome. So it was a great experience that, again, wasn't looking for it, but that was the most money we probably made on one deal.
Yeah, certainly one. And also I think it had the biggest impact for where we are as far as our living environment and where we wanted to be, bringing the kids and everybody closer as well.
But I would say other things that we've made a bigger profit on has been land, buying and selling land, which is what we're back to doing now. And part of that is what I want to say to new entrepreneurs and someone that has owned a whole lot of businesses is be very careful with brick and mortar businesses. Because when you have your set cost, you got to know if you're open a cupcake shop, how many $3 cupcakes do you have to sell every single day to keep your lights on, keep your staff, and keep the doors open? And if they are not 100% on those numbers and know if they can make those numbers, then you can go belly up very quickly. So not trying to scare anyone, but you need to have enough revenue coming in that not only are you breaking even, but you are profitable. And we have just found personally that our businesses that have been able to be virtual or work from home or whatever have made a lot more money because we didn't have the rent, the electric, the staff, everything that is involved in owning a brick and mortar business that ties you to that business all day, every day, 7 days a week.
No, that's great to hear, right? Because it's nice to hear all the different things that you guys did. Because like I said, you guys did a lot of business from the past, and it evolved all the way to real estate now, which is really good. So where can people reach out to you?
GorillaCapitalPartners.com or AspireRealtyTeam.com. Phone number is really easy, 817-666-3336.
All right, guys. Thanks for being on the show. It was an awesome episode.
I appreciate it.
Thank you. We enjoyed it.
Hey you, do you need a voiceover? Well, look no farther. Northway Capital Group has your answer. Commercials and explainer videos, AVR and voicemail, health and wellness, corporate training and e-learning, announcements, documentaries, and biography. Contact us on social media or email us at northwaycapitalgroup@gmail.com. Thank you for listening to the S.M.E Stories podcast, which is owned by Northway Capital Group. Please follow us on Instagram and Facebook at Northway Capital Group.